Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, thank you for making time today.
Good afternoon.
Well, positive comments on the U.S. economy from Fed Chair Jay Powell, but stocks on Wall Street closing a little lower. Though we've also got inflation data coming up on Tuesday, so the S&P about flat, the Nasdaq taking a moderate hit. What's the story in the global markets?
Yes, as you said, U.S. market did some correction yesterday. The Dow Jones fell by about 0.2%, while the Nasdaq was retreated by about 0.4%. And S&P 500 ended virtually flat. Given the fact that since the beginning of this year, most of the market for U.S. has risen almost two-digit number, we think that some some relaxing of the market is necessary, given the fact that we are looking for inflation numbers and also further future economic growth numbers. If you look at the corporate earnings side, it is likely to enforce the views of robust U.S. economic bounce and continuation of economic growth resulting into earnings growth rate would probably have more push to the equity market to rise in the future. However, though, we need to look at these earnings number coming through. The first set of results will be coming from the banking sector. The Goldman Sachs and JP Morgan Chase and Wells Fargo will be all releasing the quarterly results on Wednesday. And towards the end of the week, further amount of the releases will be coming out. And we do expect that earnings growth rate for the first quarter will be, on a consensus basis, more than 25% year on year. If that's the case, we think that the market will have some additional rise in the future.
Well, here in Korea, the KOSDAQ closed above 1,000 points for the first time in 20 years, but today holding on to that level. And in fact, it's been chasing after the KOSPI in terms of performance this year, even outperforming at times since last year's crash. What do you make of this run-up on Korean tech shares?
Well, if you look at the Nasdaq, you know that Nasdaq has risen much more significantly in the past several years. And I think that implies to the Korean KOSDAQ as well. However, though, the Korean KOSDAQ is much more focused towards the bio sector and healthcare sector. Most of the market cap-wise, more than 40% of that is related to the bio and healthcare sector. And most important factor is that industry is improving quite rapidly. If you look at the earnings growth rate expected for this year, you're looking at about 28.8%. Going into the next year, another 19% for the KOSDAQ. However, though, the multiple-wise, it is more expensive than KOSPI, as the P multiple trades at about 24 times, while the KOSPI is trading at only 14 times. And if you look at the overall KOSPI's earnings growth rate this year, we're expecting to see more than 34%. So all in all, I think that KOSDAQ and KOSPI are doing much better than most of the global market, given the fact that economic growth rate is better and also earnings growth rate is much better.
And some big news late last week about Korea's National Pension Fund, which of course is the largest institutional investor in the country and is said to be the third biggest pension fund in the world. It's going to raise the limit on its investment in local equities by 1%, which means it'll have to stop selling as much as it has been. The fund had a strong return in the past year. Tell us about this move and what effect you think it'll have on the market.
Well, as you know, that the national pension and the domestic institutions were the major seller of the Korean market, while the recent retail investors are the net purchaser of the Korean market. As far as the foreign investors are concerned, they're kind of net neutral these days, given the fact that one is actually normalizing and stabilizing. The key question mark is that whether or not national pension will be selling more or not. We think that it will probably stabilize in the future, given that the percentage has changed. One thing that just because of the regulations or rules, the selling of the Korean market by national pension doesn't make any sense, given the fact that, as I said, the earnings growth rate and valuation for Korean market is much cheaper than the global economy or global equity market. So I think that this kind of move is definitely positive, particularly given that large cap companies are the ones that are showing the strongest growth in earnings. And if net selling of these large cap companies, something like Samsung Electronics or Hynix, it stops, then it can be very positive news. Furthermore, we think that the local money are flowing into the equity market, and we've seen that happening for the retail investment on the customer deposit basis, and we think that that continues in the future. Therefore, I think that in terms of the liquidity conditions, supply and demand side in terms of the market will be positive.
And now, more broadly on the economy, Korea's exports we see this month are continuing their recovery, up about 25% from a year ago, and the daily average up by about a third. Obviously, this is because exports fell so much last year in part, but what do you see happening with exports?
I think that export is the main reason why we are seeing very strong economic growth rate for Korea and strong earnings for Korea. As you said, it is up for the first 10 days by about 25% year on year. If you look at on a daily basis, it's actually up more than 30%. I think it's something more like 32.6%, and that is a significant number, given the fact that the Korean economic growth rate itself was not that negative relative to global markets. So yes, it is from the low base, but nevertheless, we are seeing very strong growth rate in various industries that are related to the fourth industrial revolution. For example, wireless communication devices were up 52.5%. Petrochemical products were up 35.2%. Automobile sectors almost 30% up, and particularly for semiconductor, it's up 24.8%. And that number will rise even further going into the next quarter. So all in all, this such a strong export number means that strong earnings growth rate and strong equity market in the future.
A remarkable turnaround. All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for sharing your insights with us, as always.
Thank you very much.